Well, joining us here in our Moneycontrol office is a very special guest today. Atul Suri of Marathon Trends PMS is joining in, and I just thought of catching hold of him and talking with him about the markets, given the fact that we are very close to those record levels, right? Just 2 to 3% away from record highs of 18,800 or thereabouts. Atul, where do you expect the markets to head, given the fact that we have cleared the 18,400 mark?
Well, I think our markets are headed higher. Last year was a challenging year. Globally, markets were challenged. But I think this repair that is happening is not just in India, it's happening globally. So based on the internals, I get a feeling that it's difficult to time whether it'll happen this week or next month. But the fact is that global markets are repairing the damage of last year, and I think they'll be headed higher. India will be headed to new lifetime highs and much, much higher. I have been on record, in fact, like a broken record, talking about 21,500,
right,
which is a massive move from here. But I do think that India will be one of the leader places. As I said, one is global equity markets are repairing, but even if you look at the internals of the market, you'll find that a lot of sectors are making lifetime highs. The most important sector for Indian markets is banking because of the weightage that there is. So Bank Nifty is at almost lifetime highs. You'll have the PSU index that's at lifetime highs, autos at lifetime highs, FMCG at lifetime highs. So when you have so many sectors and themes that are breaking out to lifetime highs, it's sooner or later that even Nifty will get there. Also, if you look at the mid-cap index, because very often the market gets distorted by the top 50 stocks. But if you look at the mid-cap
this
stocks,
time it's about the broader rally.
Yeah, it's about still about 2.5% of lifetime highs. So I think that there is a broad-based recovery of damage that was done last year, and sooner or later we will see flavor or the euphoria, or let's say the favoritism towards equity coming.
Like you mentioned 21,500. So that's
right.
like a little.
That was meant to act as a.
So a couple of years ahead.
No, I don't think so. I think that will happen. I would be. You won't be surprised that it could happen within a year. Yes, I think so. Because see, what happens is that for the last 1.5 years, we've done nothing as a market. We have gone sideways. And in a bull market post the 2020 post-COVID run, the markets have consolidated. And consolidation is the nature of the game, correction is the nature of the game, it happens. And post that, when we come out, I think that we always have a leg up. So I do think that we are headed higher. The number may look very intimidating now, simply because the last 1.5 years we've done nothing. But once the bull market starts, and which I think, as I said, is global in nature, you'll be surprised how soon we get there.
So what kind of strategy should one adopt? Is it a buy on dips market, or would you ask investors to sell on rise now?
No, I mean, based on what I said, it's definitely a buy on dips market. But what happens for equity investors is that they need to see euphoria. It's when euphoria, you never invest when you think the market's appropriate. You invest when your friend starts making money.
Right.
The left out feeling is the biggest
FOMO.
motivator. Yeah, FOMO is the biggest motivator. So FOMO will happen when markets make lifetime highs, and people say, oh, the market's at lifetime high, then invest, and then money tends to come in. But I do think that we are not there. We may correct, who knows, we may have a time-wise, price-wise correction. But the important part of the structure is settling towards the upside, which I think it is. I feel that corrections are great times to buy. But let me also tell you that people will not. Ultimate emotion is FOMO.
Right.
And when FOMO happens, as I said, it's not about me making money. It's when my neighbor makes money. That's when I really want to invest.
Right. So you're talking about money making. Which are the sectors and stocks you think are looking good after the earnings season that just went on?
I think that some of the interesting areas that we feel that markets look very, very attractive is some unloved sectors for over a decade. Like we think engineering and capital goods are sectors which have done nothing for a decade, but we find a lot of stocks in this space doing very well. So we like electrical equipments, we like engineering, we like some of the infra plays. I think some sectors that are doing well and will continue to do well is defense.
Right.
We find hotel stocks very interesting. That's doing very, very well. So I think that there are autos have done very well. They broken. We like auto ancillaries. So these are the kind of themes that we like. Again, they are themes which are not loved, which have not done much. They're definitely underwrote. But I do think that the whole industrial cycle is turning out. And if the capex cycle moves, the private capex cycle restarts, I think these sectors will do very well.
Right, those are the sectors to watch out for. Lastly, what about your view on crude? You've seen Brent come back to levels of $75 or thereabouts. Do you expect crude to settle around that $85 mark in the medium term, or is there a chance of hitting $100?
No, in fact, I view it at 65. So I view it the other way around. In fact, crude is very, very important because for the Indian macros, because we are, it's a very, very thing for our balance sheet. And when crude prices are falling, it's generally very good for India. The OPEC has been very active in cartelizing, led by Saudi Arabia, and of course you have this whole Russia-Ukraine piece that is coming in. So in that sense, we term that there is a lot of supply-side disturbances that are happening. But in spite of that, I think that crude, in spite of all attempts of OPEC to cartelize, you'll find that crude is slipping towards the 70, 75 levels. 70 is definitely a very important support. That's the last time that it bounced from. But I do think that crude hopefully would be towards 65. And apart from India, what it does is that it sorts out the whole inflation issue. Because globally, the biggest problem last year was inflation. Because it was inflation, we had to raise rates, and because rates were raised, it had a knockdown effect on equity. So I think the biggest input in inflation control is going to be a declining crude prices. If crude prices come down, I think inflation globally would kind of settle down, which would have an impact on bond yields, and I think that would be very, very positive for equities.
And of course, we are already at the end of the rate hike cycle as well when it comes to.
Yeah, I mean, for now, it's now, as it seems like it's more a matter of time. It's more a matter of time, and I do see that at underlying, if you see commodities for the year, the worst performing asset class is commodities. Last year, they were the best performing. And commodities are a very, very important input for as far as inflation goes. So if commodities are off so much, sooner or later with a lag, inflation also is going to cool off. If that helps, I think then that's where bond yields will play out.
Well, with that, Atul, thanks a lot for taking our time and joining us.
Thank you very much.
Well, you heard it from the man himself. Markets are headed towards lifetime highs at 21,500 is the level to watch out for in the Nifty. Thanks a lot.